All right, so my city traders, I just thought I should bring this particular powerful video to you. Um this is synthetic index. And so just to let you know actually that I actually also trade synthetic and to tell you the power of ICT top-down analysis using synthetic. Now, you need to understand something very important here. This is purely ICT and a lot of concepts I'll be revealing to you here. I'm going to see there was a video I made long time ago when I started. In fact, before I stumbled over ICT, I'm going to see how I will get that video back. And I then my understanding of forex was purely on candlestick patterns. All right, so I actually spoke on different candlesticks. So if you are actually my subscriber, a little bit older than now, if you're here and you have this particular video, it's actually on Forex for beginners. It's specifically talked about candlestick pattern. Just send me just put down at the comment section. I would like to have a video. I don't know what happened to my channel. Something happened and I think the video was completely off the channel. So I don't really know what happened. Just want to make reference to that particular video because of what I'm about to say in this video. All right, so now I basically use two time frame, okay, for synthetic, this particular synthetic. And I'm currently on the demo trade. This is paper trading, back testing, the power of top-down analysis, which I know I've been on synthetic for a while. But I've been trying to do a few back testing on ICT top-down analysis, ICT concepts such as fair value gap, order block, and the rest. So if you're new to this channel, please do well to subscribe. And if you're a new beginner, whatever you want me to make videos on, just let me know. And I'm going to be doing that. All right. So two time frame, like I said, the first time frame is actually the daily time frame. Actually make use of the daily time frame. Okay. I make use of the daily time frame. That is I make use of the daily time frame. Okay, 24 hours. All right, sorry about that. Let me see. Okay, this is the time interval 2 minutes, 4 hours. Okay, now play. Okay, let me just. All right, so now I'm going to be going straight to the daily time frame. Now, like I said earlier on, I actually make use of two time frames for you to be very, very precise. So what I saw on the daily time frame, this is volatility 25, one of my best index. Okay. Now you notice that this is the daily time frame according to this particular data range. Okay, by trading view actually. So I looked at this. I knew market was actually going higher. So this is simply a bullish market after it returned here. Now, something happened. Just watch what I'm about to show you right now. Like I told you, the general top-down analysis. If you watch my video on, if you watch my video, the last video I post on top-down analysis, where is it again? I did the videos on top-down analysis. Okay, guys, this is a new channel. I need you to subscribe, post this video, make sure you like this video. See the look at this video. I posted this video 2 days ago. Mastering top-down analysis and market structure shift, blah blah blah, my trade entry and the rest. So if actually you want to learn a little bit more from top-down analysis, I will crave your indulgence to please watch that video carefully. All right. So back to this. All right, back to this. So I saw this after price traded into, look at what happened. Something happened before price will reverse. Take this from me, guys. Price is going to sweep liquidity. It swept this liquidity here. It swept liquidity, this particular liquidity. All right, this is daily. It swept liquidity, but how far? Now there is a support. This is what I refer to as support. There's a part of this fair value gap that is not filled yet. Okay, I'm going to mark it. Okay, There's a fair value gap here that is not filled yet. So price returned back into this fair value gap here. This particular fair value gap. Price returned into this fair value gap. This particular fair value gap here. And price returned. Okay. Price reversed back. So this is on a daily scale, guys. Now it shows that the market is actually going for a particular buy side liquidity. What you are seeing here is sell side liquidity. Let me delineate it. Let me write it. This is sell side liquidity. All right. Sell side liquidity. All right. So right there, guys. Sell side liquidity. You see that? But price hit clear sell side liquidity and hit this fair value gap. I tell you guys, this is a pure buy model triggered. Now, there's something I want to show you again. Look at this. There's something I want to show you, something very, very powerful. This is a consolidation. And in this consolidation, there are three candlestick. There's this three. There's a candlestick pattern which is the hammer. Okay, like I said, let me know. I don't want to talk more on the candlestick pattern. This is just to conference with ICT concept actually, because right now I trade ICT, but sometimes I decide to look at my pattern because I actually I read depth into the ICT, into the candlestick pattern. I had some understanding. I knew because this candlestick actually is printed to the algorithm use this candlestick actually to initiate either buy side or to initiate sorry, I said buy side, to initiate buy program or sell program, because but basically at key levels. So I marked this swing low. Okay, this is a pure market structure shift right here, guys. This is a pure market structure shift, this one here. Okay, so I am trying to let you know this is where I get my bias from. Okay, I get my bias from these particular, I get my bias from daily. Okay, for synthetics. Look at what is here. What do you think is resting here? What do you think is resting here? Liquidity pool. And I call it sell side, guys. I'm sorry, buy side. I call this buy side liquidity. Now, this is purely ICT concept. Shout out to my first mentor that introduced me to ICT, Solomon King. If you've seen this video, I'm sure you will be smiling. He's one of your boy making waves. All right. So I'm trying to build my channel, bro. And so now I also have something here. So you can see this is where the market is coming. So just take note of this video, watch this video and see in the next few weeks what happens. All right. So this is where I got my analysis from. So I decided to, now when market was actually here, so I decided to go to, I actually went to, um, I actually went to, so market was here when I first of all did a buy. Okay. Yeah. I think market was around here, equilibrium. Now, this is another information I need to show you. I think, yeah, market just price printed this candle, and I actually bought. Why did I buy? I did a short-term buy. Now, take the note of what I'm about to say now. Are you ready for this information? Now, whenever you see market making a series of higher high and higher low, for example, if market makes this printed this low and broke structure to the upside. See this structure here? It broke structure to the upside. Market, this is the market structure shift right here. Or you can call it break of structure, okay? So market broke structure to the upside here, and you expect price to return. So when you mark, pick your Fibonacci tool right here, mark from here to this point, okay? You mark from there, you mark from here to this point. Now, this part of this, your Fibonacci, is called your discount. This part here is called discount. Sorry, it says discount premium. This is premium zone. Okay. This is where anything that comes around here, you're meant to sell. And this part here is called, excuse me. All right. So this part of this, your chart. Sorry, my time. I'm going to take it out very soon. All right. So this part is called your discount. Okay. This is a point where anytime price comes to this particular zone here, you what? You buy. Now, price was coming down into discount. All right. From premium, price was coming down, down, down. Initially, I knew that price was to come to around this fair value gap here. This is actually this particular fair value gap here. You see price 1, 2, 3. Price moves away. So price is meant to come back to this breakaway gap actually. This is a breakaway gap because price moves away from this point. He didn't return until he cleared a liquidity. Now, a breakaway gap, I learned this recently from Solomon King, and also actually learned from Solomon King recently. I also learned this from ICT. I learned from a lot. Okay. So but I love the way my mentor Solomon King actually puts it. One of the information I knew before I watched that video was that when there is a liquidity in view, like this buy stop here, like here, this liquidity pool right here, when there's a liquidity in view, price moves faster. It moves faster. So when it leaves gaps, series of gaps, you see, price closed above this particular candlestick, and it never returned until it cleared this liquidity. Now, that is a confirmation that price is going to return to this particular gap before taking its move backward again. Price is going to come back here. It's going to come back here. Okay. Price will come back here before moving up. So if you are seeing this video, please, you can take a very, very nice entry. Make sure you manage your trade properly. I'm not telling you this is a signal, but this is what I am looking at. I'm currently on this particular sell. But before I will show you the account I'm trading right now, actually it's a paper trading. You'll notice that this candle, as soon as I saw this candle, let me enlarge it a little bit for you to see it very clearly. When I saw this candle hitting this 50%, I saw this fair value gap right here. I saw this fair value gap, this particular fair value gap. Let me take this out so that my chart can be clean. All right. So no, I'm not taking this out because I'm going to make reference to that. Now, I saw this fair value gap in between discounts. Sorry, in between discount and premium, this particular fair value gap here. This one. So price actually, let me delineate it. All right, so you see that? So when I saw that price hit this fair value gap, I knew it will reverse. So this is the information. Whenever you see price coming from premium or discount, and there's a fair value gap in between the equilibrium. Now, this line is the 50%. You see that 50% is the 50%. It will make price react either to the upside or to the downside. So you can have a short buy or sell. Now, in this case, I had a short buy. I bought this trade into here. So how did I do that? When I saw this in this daily time frame, I went straight to 1 hour. Directly to 1 hour, guys. I went straight to 1 hour. Let me take this out. I went straight to 1 hour. You can see that. So price came down here. And immediately I saw this, I without doubt, I might not show you enough example right now, but I need you to go to your chart and watch. It's actually a scalping strategy, a scalping model. So price came. So I saw all these sideways price action. So as soon as I see that it hits here, I got into a buy here. So I watched and watched, and I discovered that there is a fair value gap here. But before the fair value gap, there was this liquidity here. In fact, this liquidity here, no, I think this was even when I got into the market here. So I saw this liquidity here and a fair value gap. And I know that according to the algorithm, I know very, very clearly that price will sweep this liquidity into this fair value gap. Take note. See, don't deceive yourself. The price will go up. No way. It won't go up yet. It will not go up here because ICT explains what we call the OTP, optimum trade entry. Price will reverse at the extreme fair value gap. That breakaway gap I showed you in daily. So price took out this liquidity into this fair value gap. As soon as it does that, I knew price will reverse. So I left. I moved out of this trade. Let me quickly show you something. This actually is my demo account. And guys, let me open the MT5 actually. I don't know if I'm still in this trade. Okay, so the trade is still on, I guess. Actually, I've been on this trade. You can see that. Can you see that now? See this? Okay. All right. So okay, so that's okay. Look at this. Look at this particular. I don't know if these. Okay. Yeah. All right. So look at this trade. Now you see that it's a massive profit. Massive profit. Okay. I don't know if you can see that. Let me see. Like I told you, is actually in profit. So I actually was in the trade. Okay. So you can see that now because it came and swept liquidity. So this was the trade actually. You can see. So because I'm expecting it to hit a particular target. I expect it to hit a particular target. The TP is around say the TP is around 2221.200. 2221.200. I'm going to show you in a while. All right, so you can see I actually put the stop loss at this point here, 2221.200 right here, 2221. Yeah, around here. Yes, 0.200. Around this point, just around this point. Now, I knew price was going to reject from this point. Now, you see this place I circle right here, this particular place I circle, this is an entry model as well. I wanted to introduce you to. This is called the evening star. All right. Now, recently, yeah, it is actually three price action, three candlestick price action. You see that? See this evening star, and it actually forms an effective when it hits a key level, like your POI, for example. Like this is it. Price was printing a bullish movement up. See that? So it forms this particular B candle, and then this particular tiny candle in between, then this other one here, this last one closing below this one. So this is evening star. So if you want to get into this trade, I think, yeah, I shot the trade right from here as well. So when I saw that particular entry, I got into the trade immediately. So I knew it was going to reverse. So I got into the trade here, and my stop loss was a little bit above this fair value gap actually for to be safe actually. So you see that, and the price has been moving wonderfully well. So this is simply a simple top-down analysis. Now, what did I actually see? Like I told you, from the daily time frame, guys, from the daily time frame, I saw this. From the daily time frame, I simply saw this. I knew price was printing a bullish movement from this fair value gap. And as soon as I saw that, I saw this buy side right here as well. So price is coming for this. It's coming for this, but I don't know how far will that be. So this is going to be a very fantastic trade. But right now, the price is in a retracement form. Like I said, this is where the buy will be initiated. I'm going to be getting a buy here, but until I see a confirmation. So I'm actually counter trading. I am selling because I actually know what the price is going to do. So I can do both sides. I can actually, this is the expansion and this is retracement. So it is this retracement that I entered into in 1 hour because I know this is simply understanding price action. Okay, this is it moved. It took this liquidity above here and it came down into this other block here, and then it took this liquidity again, and I want to presume that it's going to come here. Now, it is my analysis that I felt that it was my prediction that I felt that it was going to come to this place, that I went to 1 hour to take a buy. A sell before I resume the buy. What's it called? Before I resume the buy program. So this is where I'm expecting the price. And you can see the price is actually reacting. Now, there's something I drew here too. I want to show you everything so you can learn. I just want you to go to your chart and see for yourself. Now, this is weeks. ICT spoke about these weeks here. This week is like a gap. Now, I marked the 50%, the consequent encroachment of these weeks here. It is very powerful, especially at higher time frame, 1 hour. So I knew price was going to react to this week here because I was looking, I didn't see a fair value gap. So I marked from here to this point. Let me see where price will reverse back. Okay, I'm going to update you on this trade. And I knew that price was at equilibrium. Like I said, at equilibrium, price sees any institutional reference point like this week, consequent encroachment, it will react to it and bounce straight here. And guess what, guys? It's going to sweep this liquidity into my target. That's exactly, I'm going to be showing you, I'm going to be doing a part 2 of this particular trade that I call top-down analysis and price action in synthetic. All right, so I'm going to be closing this video from here. If you have any comments, if you have any questions, you can write down at the comment section, and do where to subscribe if this video is hitting you for the first time. All right, bye.